And welcome back, everyone. Money Show would like to welcome Toni Hansen, President and CEO of TonyHansen.com. She's one of the most respected technical analysts and traders in the industry with a reputation for accuracy in both bull and bear markets. A leader in market education, Toni has been trading and educating new traders, money managers, professional market analysts for over 20 years. Toni, thank you so much for being here. Always a pleasure. It's all yours.
All right. Well, thank you for having me here today. It has been quite a market out there, huh? A lot of back and forth. One of the main things that is so important to traders is really understanding when a trend is exhausted and when we can really see or expect a larger correction. This is a particularly important thing when you're looking at a lot of longer term investments, but it really applies to everybody in the market. As day traders, we really have to know, when can we expect a much larger trend? When are we looking at something that is just going to be a shorter term move? We saw specifically here as we were going into the year where the market was showing all kinds of signs that it was getting exhausted well before the COVID-19 stuff hit the fan. So, what we're going to look at today are some of those signs that give the indication of how these trends unfold and just three very specific things that you guys can take today and walk away from and apply to your trading. And I can even use live examples because as we were just heading into class here, I had a trade on in the ES. It was just a scalp. I had actually flipped a position that I had earlier, and so I'll show you how these things can unfold on the smaller time frames, just like they do on the larger time frames. So it doesn't really matter what you guys are trading. Some of you I know are longer term investors. Some of you are just day traders. Maybe you're trading Forex, maybe you're in the futures market. It doesn't matter, you guys. Everything I talk about here in today's class is going to apply to you. So let's head on over here. I'm going to start with my slideshow, and this is a class I've given for the Money Show for many, many years. It's just really popular because it's something that not only new traders can use, but also traders that have been around for a while. You go back and you listen to things that maybe you studied years ago, and you're always going to pick up something new, some nuance that you missed the first time around. A little bit of background on me. I've been trading since 1997 online, like way back when the markets were first coming online. And at that time, there wasn't a lot when it came to technical analysis as far as education goes. There are basic ideas, concepts like buy pullbacks into 20 period moving averages. I use that example all the time because it was one of the things that was kind of drilled into my head back then, but really there wasn't a lot of more in-depth analysis out there available. A lot of it stemmed from more the fundamental analysis angle. I came into trading as an archaeologist, so I had no background in finance whatsoever, but I did have a very extensive art background. So I'd been trained as an artist since I was a little kid. Basically, everything under the sun I did is in the art world. And so when I got into trading, looking at patterns in the market and looking at like the visuals of how the market was developing and unfolding really struck a chord to me. I am excellent at picking out patterns. I'm kind of tooting my own horn there. Don't test my short-term memory. My short-term memory is horrible. But when it comes to recognizing patterns, that is something that I've always had a really strong aptitude for. And so when it comes to seeing things that are happening in the market, basically what we're looking at is we're just looking at human psychology just mapped. And that's all charting is. So when we're using charting to recognize trend exhaustion, there are three really basic concepts that we can apply. So, first thing, what is a trend? I know some of you are completely new here to trading. You probably started hearing things around like Elliott wave or wave counting and that kind of stuff. And very simply, uptrend is just a series of higher highs and higher lows. Downtrend is lower highs and lower lows. And what is funny is, so we're used to the terms, bull market and bear market. And I saw a meme the other day. I gotta use that word. I saw a meme the other day where they were talking about sideways markets chopping around, and they called it a kangaroo market. I've been trading for, oh my gosh, what's it been, 23 years now? And I don't remember hearing that term before, but it's a really good term for using when the market's kind of going sideways and chopping around. And you can really get kicked in the gut if you end up on the wrong end of that. So, this zone in here, that's what people would call a kangaroo market. Now, when we're looking at specific aspects of a trend, one of the main terms that you guys need to know is impulse move, or sometimes it's called an impulse wave. And what this is it's this primary directional move where we will get momentum that is average to stronger than average. You'll see a surge and then you'll get a correction where the market is pausing, it's catching its breath. Sometimes that correction is a pullback, sometimes the market's just going into a trading range. But each of these larger moves is called an impulse move. And of course, they're fractal in nature. That means that you're going to get smaller impulse moves within the bigger impulse moves. So, for example, our downtrend here, we have a much larger impulse move. And if you look at this on a larger time frame, this would be a stronger than average move to the downside. But we also have those smaller moves that are within those larger moves. This is really important when it comes to trend exhaustion, because when you're looking at an impulse move and you look at the rate of change that's taking place in that wave, look at like the pace or the momentum of the movement in that impulse wave. If it is similar to those that you've seen in the past, like for example here and here, both are kind of coming off of lows. This is a double bottom that we saw overnight, and it's hitting about that same zone of where this went into a correction, went into a trading range. So when these impulse waves get to that level, this is a warning sign to me that, hey, a bigger correction can happen now. That channel might break. We could get a pullback, we could get a price correction, or we could get a time correction. There's actually three ways that the market can correct from these impulse waves. Let me just kind of go over those quick. I didn't include a slide on them, but I'll just kind of detail them first. So if here's an impulse wave, we can get a price correction like that. We could also get a time correction, which is just, more of a sideways back and forth type of move. But here's the third type of correction that a lot of traders miss, and they don't even consider it a correction because technically you're still getting higher highs happening. And that's, you'll have the strong impulse wave here, but then you'll see that the channel has changed compared to that impulse wave. So the buying will still be there. We'll still see these higher highs, but it's getting harder and harder to really break to substantially higher highs. So this is actually the start of a corrective type of move. It's a type of correction where the market is doing a little bit more of a time correction, but it's still kind of pushing to those higher levels. So that's another type of correction that a lot of people don't really, focus on too much. So here's the first thing we're looking at are, what are impulse moves? Now, this brings us to the three signs of trend exhaustion that you guys can look for. So first of all, measured impulse moves. That's one of the key ones. This is one that helped me overnight, recognizing lows that, we were going into in the after hour session. I trade overnight. A lot of times it's quieter here since everybody's home and things can be a little bit insane during the day. So overnight trading is great. And here's some of the smaller impulse waves. Now, when these take these as a whole, you can get a bigger impulse wave like that. But if you look at them over and over again, what I did was I went from the high to the low up here on the first one, and I just copied and pasted it to every single impulse move on the downside where the momentum was the same. So the rate of change or the price movement was the same. And what you can see is that as soon as you get those measured move levels, we have support levels that hit. Sometimes it will be a price or a time correction. Sometimes it will be more of a price correction. Sometimes the time correction is longer. Sometimes it's a combination of the time correction and a price correction. But those measured impulse waves are one of those tools that can really help you out, and you can add them on your charts really easily by using like a Fibonacci extension tool. So for example, if I go here and I'm looking at this upside move here this morning, and I'm looking at the continuation move. Well, this starts out with the same momentum up here. So you might have a target level at that 100% extension. The key though, let me show you where that 100% extension is. It's up here. The key though is that this has to maintain the same momentum. And it doesn't. It goes into a little bit of a longer correction right here than we see on any of the upside corrections. I'm going to come back to this, but I wanted to show you how to apply this particular tool. You can, of course, just visualize it without using any sort of indicators or anything like that. You can even go and just use a simple line, add that on there, and you can go and copy and paste that line and give you the extension up there. There's some benefits of using Fibonacci extension, namely being that if something pauses when it's at around the 50% extension on the impulse wave, meaning it's about halfway compared to the previous impulse wave, and it stalls there, it can have a harder time getting to that 100%. So you want to watch how long it kind of pauses at that zone. So that's just like one of the little kind of tricks there. So there's your measured impulse waves. Here's another example, and this is from Netflix. So I have a lot of traders that have been trading Netflix since, COVID and everything has happened. And it gives you a really great example of how these measured impulse waves can help predict exhaustion on the upside. So traders were looking at, okay, so how long can I still hold this Netflix? And I'm like, well, it's actually at exhaustion levels right now. We might still see higher highs, but it is at a zone where a correction now has higher probability of happening. And remember, there's three ways that correction can happen. It can go into a time correction, it could go into a price correction, or it could go into that shift where it still goes higher, but maybe the momentum changes. So in this case, it did a combination of the price correction and then that third type of correction where it still managed to go higher. It just couldn't do it with quite that same momentum. You'll see a lot of overlap in the things that I'm going to share with you guys, but that's just, one of the core things here. So here's another example. This was the ES coming out of the open. I had a trade trigger on this, and there's other fib levels for taking this. They actually have some even earlier triggers, which is kind of cool. There's a Fibonacci support level down here. But if you take like the traditional kind of smaller channel break, you got a trigger here. You go and you look at this first upwards push here before the main correction, and go and add that extension there, and you'll have that 100% level. So it was also coming into another fib resistance level. So that told me, hey, this is a good zone that I can get some sort of reaction. Now the trend can still continue after that move, but the shorter term impulse trend has a higher probability of breaking that smaller trend channel. So the same concept can then apply to much bigger time frames as well, where you might still get a continuation of a bigger bull trend, but in the shorter term, once you got that impulse wave hitting where the momentum's about the same, and that's key. So what I showed you here was I drew from the low to the high. I copied it and I pasted it, hooking this low up. And that's where it gave me the high. So you can see where it projected the high was right about here, and it's pretty darn close. In fact, I was maybe off a little bit when I drew my original line up there. So it's almost exact because the momentum was almost exactly the same. And you can tell that because it kind of chopped across the middle here, right about the same way it chopped across the middle here. So you've got that same underlying momentum at play. So this told me, hey, you know what? If I'm doing advanced trade management, I need to protect some of my gains here. I can add back at a better price, but I need to expect that there's going to be some sort of a pullback at that level. And indeed, there was. Let me actually go and show you guys that updated chart on that here so you guys can see where that was. So this was, right into the open, like I said. Here's my larger time frame on this. So you can see that pattern right here. It's a pattern I call a phoenix because you're basically rising from the ashes. And I just took the trade that I was just doing right before we started was another one. So you can see this went higher. It went into a megaphone first, and then it did another impulse move, very similar to what we saw on the previous impulse moves, though. So we get the Phoenix here. There's your Phoenix. And then this is a megaphone. And a megaphone can be a continuation pattern or a reversal pattern. If you have a correction first, then that megaphone has higher risk. It might not do as strong of a continuation. So you want to watch for when it gets to that upper end of the channel again, which also happens to correspond with our first impulse wave as far as the size and everything goes. So again, another key level that shows exhaustion here. And we get the same thing again on downside moves, the corrections, similar momentum shows us where those support levels are going to be. Here, let me show you the trade I just scalped this. It wasn't like a big setup, but it was the same pattern. So here's the Phoenix, here's the breakout, here's my first impulse wave, and you can see it's a two-wave move. So when this broke here, you can see that this segment is a little bit larger than over here. So my original target was this, which was about right here, but the momentum was a little stronger and went a little farther. So what that allowed me to do was then take this breakout impulse wave and double that to give me a little bit of a better target than what I was originally anticipating. So that's the nice thing too, is if your momentum picks up and it's stronger, which you can't tell this on the tick chart, it looks about the same, but if we look over on a time frame chart here, the 30-second chart, remember how I said that the momentum has to be the same in order to get those measured moves? Well, look here. This momentum is slower over here. It's faster when it breaks out. So a lot of times that extension will come to about a 123.6% extension versus 100%. Let me put that on there. So what we're looking at is that when this comes and breaks out again, and I'm using basically your second low here. You can use your first low. I usually use the second low or the one where the momentum is breaking if there's two lows kind of in there. Basically what I'm doing is I'm treating this like a first correction and this like a second correction here. So faster momentum means it can make it to that 123.6 instead of just the 100% level. They really need to give me more than like half an hour to teach you guys stuff, right? Half an hour goes by so fast. But let's move on here. So your second thing you can look for is wave count. I don't use a traditional Elliott wave, but you're going to see some overlap here. So a lot of times you'll get like a three-wave move and then a bigger correction. Elliott waves calls it 1, 2, 3, 4, 5. I call it 1 and 2. The reason I do that is because this zone in here can be a two-wave correction. So a lot of our corrective moves will take the form of two waves. And so when this offers a continuation later on, I might get a continuation that's a little bit longer and still be able to offer up that level where I can get the 100% extension. So instead of doing like little three-wave moves, it might only do two-wave moves and still get to that 100% extension. So here we can see that if we just use a three-wave, sometimes that third wave can be stunted. So that's one of the risks. You'll often see me rely more heavily on two-wave movements than you will on three. So here's another example showing our wave count. We get a two-wave correction, two-wave move back up, two-wave move back down. So I'm often using these twos and twos, I call it two-stepping, versus focusing as much on three waves. And if you kind of switch how you think of things and look at things in the two-wave format, you're going to be getting higher probability on your trades overall. So think of things as two-wave moves instead of three-wave moves, and you're going to be a little bit ahead there. And sometimes when you do your wave count, they can go and flip on you. So you might have a two-wave correction, but then your momentum is changing overall. So this starts out with a strong momentum move here, but at that point where it really should have gone to get to the 100% extension, because like I said, if we look at this pause here and where that took off, there's your correction, similar correction, but it doesn't just go. It lacks the confirmation right here. So to get to that 100% extension, it needed to confirm right here. It could not do that. So this told me, hey, you know what? I'm not going to be able to get that much on my target as easy. I need to go and then look at the smaller impulse waves again, here to here. Use that to get out of my trade and then look at flipping the trade because then I've got a reversal set up at this point. So what you'll see is that I did a lot of day trading here, but you can do this on really any time frame. So this pattern that took place up here, this is one of the patterns that flipped the entire market earlier this year on the daily and the intraday timeframes. It is something that will lead to major reversals on many timeframes. In fact, it's what we are seeing happening here on the NASDAQ on the larger timeframes. Kind of flip this over here. I'll show you guys the 20,000 tick here. See what's going on here? Pullback, move, higher high, and then it did a smaller version of this. So this told us yesterday that we were going to get a bigger pullback into the afternoon and possibly overnight. So it can trigger that bigger correction. So you've got your stronger trend here. And in this case, it's the three waves. But again, you can think of this as wave one and wave two as well. All of these impulse moves are about the same size here. So as this goes and shifts that momentum, this move to this move gives us the exhaustion there. This move to this move confirms it, and this triggers these short setups into yesterday afternoon. So great example of this, just showing us again here on kind of what's happening in the current market, but it happens all the time, you guys, on your daily charts, on your weekly charts. So you can use really any time frame. So the third thing we want to look at is that momentum shift. And again, that is the thing that can give us a clue that we're going to lead to a bigger correction. So this triggered a short here for me. Again, I was long originally, but it flipped the trade as this did the measured move here to here. And usually, if things aren't going to get to 100% extension, they'll get to that 76.4. So remember, if the momentum is faster, aim for the 123.6. If it's slower, aim for that 76.4. That's going to give you a much better handle on where to take your gains when you're long and where you can look for reversals if you're looking at, major levels of resistance. So this triggered a short. You got the channel break, you got that smaller channel break, and notice that this is playing around here in the lower part of this range. So that also gives me a clue to look for the downside. It got off to a little bit of a slower start thanks to the stronger little push there at the end, but the overall momentum was shifting, and that led to the bigger reversal that we saw here not very long ago. You can see the same thing happening on Netflix this morning. So we had the initial drop, really strong momentum, very similar to the impulse wave on the upside here. But then the momentum starts to shift. So here you get this big, huge Morbozu type candlestick here in the middle. It's just a really massive momentum move. Here the candlesticks get smaller. There gets to be a little bit more overlap with all of the bars. And then on the third move, we get a lot more overlap. You can even see kind of in here, there's that two-wave move to the downside. So this is telling me, wow, now this needs to go into a longer correction. If it goes to a lower low, that lower low is more likely to be a trap if it does it pretty quickly. So that can even go and turn around and flip trends. So here's another look at the momentum shift again on Netflix, but this is on that daily time frame. So you can see that momentum shifting up there, all of that overlap. And this is where that same reversal pattern could have happened. You don't see it as clearly in here. You don't get this pullback right here, but you can see that the spirit of that reversal setup is still in this level. So it goes up to that level slower, and it's basically that channel shift. So that again triggers a short at this point, and it triggers a longer correction. We also have the momentum shift with the corrections themselves. We've got first a time correction and then a price correction. That makes it harder for a trend to continue. It makes it easier for stronger momentum to take over. And this can even go and lead to bigger reversals at times too. You have to watch the momentum within this channel. But if this hadn't pushed higher here really fast, kind of based along here, that would have triggered a short, brought in more selling again. So we're watching these momentum shifts within the channels and the trends themselves to give us a better feel as to where these things are going as well. So if we put this all together, here was the reversal as a short. I took this here as a buy. So I said I told you guys I flipped it, but that was the buy setup. Was that phoenix on the bigger time frame. So up here, the momentum shifted, triggered the short, slower start to it, did a two-wave correction here, and then the momentum picked up. So instead of looking just for the measured move here to here as a target level, that pickup in momentum offered that additional confirmation on the downside. And that meant that I could look for even more downside than just the measured move. And a lot of times, what this will do is it will go and do a two-wave continuation here where the breakout momentum then becomes your primary momentum to follow. So you look for like a two-wave move like that. All right, so I've got a couple of minutes here left, and I can show you guys how this played out here as well too. Um, but look at this here. So here's the impulse correction on blue, blue, blue. This just shows those initial corrections where the momentum was the same. So you could see that when I did the screenshot, there was still a little bit more room before it would hit. Looks like I lost you guys with the screenplay. You guys see me okay?
Yeah, Tony, we see the all together chart right now.
Okay, great. Where did I lose you with the screenplay? That was kind of weird. I don't know why that paused.
Looks like maybe it was stuck on NQ.
Okay. All right. Well, we'll go forward here from here. We've got just a minute left, but what you guys can see here is that on this chart here, it had a little bit more room before it would get to that impulse wave there. So that told me that this still had a little bit more room on downside. We can see a similar momentum move on the upside. So if we got a second, I'll show you guys how this played out, but wanted to show you guys, you can learn more about my style of market analysis, putting together a trading journal, all of that fun stuff in my ebook, Simple Steps to Trading Discipline. I brought this to the expos before the Money Show puts on. They'll often do like their book signings and stuff like that, some of the different booths and stuff. But it has basically everything on keeping a trading journal, looking at all of these building block details that we've looked at in today's session, and just kind of goes into more details as well. It shows you some of the other things I look at. And it's written as like a layman's perspective. So it's a very simple to read if you have no background in finance. I wanted it to be something that my kids could read and understand too. So share that with you guys. And then lastly, oh, you can get that at tonyhansen.com/ebook for $7. And lastly, I'll show you guys where the NASDAQ ended up so you guys can see how that played out there too. So here was the setup right here. And then here you can see that measured move again right there led to a bigger correction. And then we had even the bigger measured move down here. And then this was where you saw that ES flip happening. So really good example, just showing even today's market how all of these things work together and lead to my trades. And it's the same stuff that I use, you guys, on the larger time frames too. So it's not just the day trading, but also position trading, investing, everything. All right, well, my time is up. So thank you guys for joining me here today, and stick around for some of the other sessions. They're going until 4 o'clock Eastern here. So I think it's Eastern, right, guys?
Correct.
Yes, awesome. So you'll have a lot more classes and stuff coming up. So thanks again, and I'll see you guys at some of the upcoming expos.